Hey, what's going on, everybody? This is Kezon McNeill saying yes to debt free. Just coming to you guys today with another financial tip, and hopefully I can educate you guys on something that you can help your clients out with and even help yourself out with. So today we're going to talk about those bank transfers and 0% interest transfers and all that good genre. And what do we typically do when we see those type of offers? We run to them, right? We run to the interest-free option. That's what we want. Like what I want to do for you guys today is I want to just kind of educate you a little bit on how money and interest really works. You know, I won't take a lot of your time. I promise that, because I'm sure you guys are all busy. But part of understanding interest will actually make you money. Here we go. Check it out. So I got a buddy. He got an interest-free offer when he bought some furniture. Spent about $10,000. Right? Okay, spent $10,000, and you guys been through it. Oh, you can pay this off in 2 years and pay 0% interest. All right, and that payment would have been $417 per month. All right, $417 times 24 is about $10,008 actually. So he could have went with that option, right? And he was gung ho on going with that option. He was excited. It's like, man, that's what I'm going to do, right? Great. I said, what's the other option? So he said, the other option is 4% interest rate over 5 years. He said, but man, I ain't trying to pay over 5 years. That's crazy. I said, well, think about it a little bit. You know, I was like, you know, it seems like it may not be the best idea, but if you got somewhere else to make some money and make up the difference, it's a terrible idea. It's a terrible idea. Guys, you got to understand that when these banks offer you these 0% interest deals and these 0% balance transfers, all that genre, man, they already got it figured out, man. They're smart. They know that 99% of their clients are going to gravitate towards, oh, I want the interest free. I want the 0%. I'm going to pay it off in 2 years. In most cases, people do. But in some cases, you know what happens, that all the interest reverts back. But let's just assume that everybody pays it off on time. Great. You knocked that $10,000 out in 24 months. Great job. But what benefit did it bring you? It didn't bring you anything. Yeah, you got the furniture paid off. That's great. But you are still cash poor now because you don't have anything to show for that, right? So what I want to show you is this. And this is the same thing I showed my buddy, and thank goodness he decided to go with what I mentioned to him, right? So as I stated, he got $10,000 in the balance. He's going to pay it off in 24 months in 2-year time frame. If he does that, it's free and clear, right? $417 a month. I said, well, let's do this. What if you took that 5-year option at 4%, and that payment that they were offering you at 5%, I mean, sorry, at 5 years at 4%. There we go. It's $184 a month, okay? Got it. No harm, no foul. All right, everybody sees that. All right. On paper, I get it. It's like, man, that's a long time. I'm paying, you know, over $11,000 at this point. You know, I said, but look, now you already told me you were willing to pay it off in 2 years at that price of $417 a month. So let's just take the difference. 417 minus 184 gives us what? Is that 233, if I'm not mistaken, right? So there's a difference. Now, 417, again, minus 184 gives us $233 per month. You say, yeah, great. So I says, well, I got a product you can put that extra $233 a month in, because you were already willing to pay the 417. And it's going to get you a return. We got products that get you a return of anywhere from 4 to 7%, right? Great, all right. But for this example, let's just say 3%. Let's just say 3%, all right? Because I know people are like, oh, you know, I'm going to shoot it even lower. 3%. So let's say 3% rate of return over a 5-year period, all right? Spending the $233 a month. And where I got this number from, I just took the 417 minus what he's going to pay for the long way, the 5-year plan, 184, that gives us 233. So I'm going to take, instead of, you're still going to spend 417 a month, right? Because you're spending 184 for the payment, and you're spending the other 233 in a product that we have that's going to, for this example, get you 3% return. Now, we actually have products that get better returns than that, but I wanted to show you how compounding interest works with our products. So over a 5-year period, look at his final balance, $15,448. So he actually made money. So now after 5 years, yes, he's paid this off. You know, how much did he pay in interest? He paid, let's see here. He paid over $1,000 in interest. Okay, great, paid $1,000 in interest, all right? But he paid that off, all right? Now, did he actually make money? He actually made money. So after 5 years, he paid it off, and he actually has $15,063 in his bank account, in his product, his savings. And he also still has his furniture because it's paid off now. Yes, he paid over $1,000 in interest, $1,158 in interest. So let's just do this, guys. Let's take the money that he made, $15,063, right? And let's just take a minus. The money that he paid in interest was $1,158, right? He still made $13,905 just by paying the same $417 a month the way that I recommended versus just paying it off. 24 months done. Yeah, you're done, but you don't have any money after. See, guys, this is how the banks and the government get you, man. It's just real simple. I'm just giving you real simple numbers. So he's putting 233 away at 3%. Now, keep in mind, I'm giving you a low number. We're really averaging 4 to 6%. Okay? Well, actually 4 to 7, depending on the product. But so I'm giving you 3%, and he made $15,063. His net is $13,905 because he did pay over $1,100 in interest. Get it? Now, had he done it his way, which I showed you, the 0% interest way, over that 2-year time frame they were talking about, right? Let's go back so I can show you that again. You would have been paying $417 a month. After 24 months, yes, you got a zero balance. No, you didn't pay any interest. Great. But you didn't make any money. So that's what I want you guys to really understand. If you kind of understand how these banks work, it's set up for them to continue to lend money. The reason they're in business is because we borrow money, right? And we take those 0% deals, we pay it off quick. We're happy because we don't have an interest rate. They're happy because they get to lend the money out again very quickly. But what do we get out of it? Oh, we just paid it off quickly. I want you guys to start thinking a little bit, man. Just start thinking. Why do you think they offer the other option? Take the long way and then find another vehicle to put that difference in that you were willing to pay anyway, i.e. one of our products here, yes to debt free, and make some money. That's what I'm trying to show you. When you receive those balance transfers, take a look at them. But it's not a guarantee that paying 0% interest is going to really benefit you. All right. So I hope I really open you guys up a little bit and you're thinking now. If you're interested in learning more about how you can create your own type of savings account via outside of your bank, because we know the bank don't give you 1%. They don't even give you 1%. But we're talking about a compounding interest account all through our vehicle of life insurance, guys. See, people get caught up in the vehicle, right? Stocks, real estate, mutual funds, whatever, life insurance. This is just the vehicle we're using. So stop thinking about life insurance as just a death benefit. Yes, that's a part of it, great. But a properly designed life insurance policy can also prove to be a great financial tool for you. I hope you guys really got something out of this. If you want to learn more about how you can create your own bank and start capitalizing on creating your own pool of money, please reach out. I will see you guys on the next episode. And as always, I hope you're having a wonderful, prosperous day.